Good afternoon, everyone. Chris Brecher here with TradingNest.tv. Just the week ahead, a small little video of what I'm going to look for. Telling you right now, day trade short, swing trade long is still the way to do it. I just can't impress that enough. This week, TradingNest.tv in beta version will start. It will be free at first to everyone. Right now, we've been having an active Discord room that's just this right here. Is Trading Nest by Brecher Trading. Just keep in mind that this will be a lot less active from me later in the week when TradingNest.tv beta is up. I also want you to realize in here that Trading Nest will be in the beta version at first. So what I mean by that is there'll be little tweaks here and there, and that's why it'll be free for everybody. But it'll be everything you're expecting. So it'll have relative lots of charts, lots of scan results, not just scans, but scan results handpicked by me. If that includes unusual option activity, high short interest ideas, and so on, and also bull and bear flags, and also correlations, all the stuff you know and love that have come from me, as you know. So what are we watching now? I just can't stress enough, a number of things keep working. So what keeps working? Number one, high short interest. I just did a thing on this. I want to share it because I'm pretty excited about it. I just started doing YouTube shorts, and I just want you to know that of the shorts, I just started them this week. And holy cow, to me, this is pretty impressive. Now, one of them I just started today, only has 62 views. But holy cow, 900, 500. I'm very impressed, especially this learning series of trader tricks. So we'll be going over those all the time in our site. As you know, I love doing those. So what's the first thing we're going to do? Day trade short, but mess around with the stocks with a high short interest. So let's go over what we're talking about. NEGG is my poster child. You saw me buy it in the Discord room about 68 and sold it at 80, made 12 points. What do? We scanned for stocks with high short sale borrowing rates. NEGG had the highest of them all, 800%, which means just to short 10 shares, you have to pay like $10 a day. It's amazing. So what that means is, like here, all these people think you automatically buy a stock because it has high short interest. No. What it means is once it starts going up, it goes up fast. And number two, a good chart scares the tar out of the shorts if it starts breaking up, which is exactly what Newegg did. Now, I have a little more time than a YouTube short, so I'll show you the first thing I'm going to be doing tomorrow. I went over this and took 1,300 active stocks, 1,300. Took all of them, all stocks, and all I did was take all stocks, and I took active stocks. All I did then is I took stocks over to at least 200,000 volume. This is all personal preference, and I wanted it in an uptrend on a 50 period chart. The reason is, yeah, a stock could go up if it looks like that, but it's much more likely to go up fast if it looks like that. So that's how DGNX looks, NEGG, and I'll show you. So I just did this, and you'll see it's a lot of stocks. 1174 this way because I took all optionable. Some of them aren't optionable. So guess what? I took them all. So you'll see. Now it's going to come up right. 1,303. Now what we're going to do is go over here, and you're going to see 1,303, and you're going to see them sorted by short sale. So NEGG isn't in there. One is it doesn't update always correctly Sunday night, but also you can't even borrow it now. But I want to show you what some of these did on Friday. Pretty amazing. So go and check this out. DGNX, you know I liked it at 15. It kept going. ADSE, look at that sucker go. VWAV, another one. And what do you notice? They're almost all up. Holy cow, almost all up. I'm going to look at that one tomorrow. SUPX, I have no idea what they do. All I know is the stock looked great on Friday. So NVA, I'm telling you, these are where I'm going to go Monday. Now, don't get me wrong. There are a lot of stocks that look pretty darn good. Go and look at CRM. This came up on my scan because it's oversold with a MACD down here. It doesn't have earnings this week. I don't want to get swing long on something that has earnings because that can always implode. Like you saw, look how good that looked here until earnings. But I like longer term how that's looking, how it's looking like an inverse head and shoulders like you see in there. Right here, or a cup and handle you could call it. So I don't mind CRM. In fact, I have a lot of them and I'll share those in the room. I put a number of them already in that Discord room. Now the TradingNest.tv beta will be later in the week and that will have all the stuff you're used to from me. Plus I'll probably be on even more, probably 2.5 to 4 hours a day. That makes up for if you're used to having like 5 moderators. So what else am I going to show you in here? Well, number one, where could the ES go? Well, you are getting some negative divergences. But like I said, it's not that the NASDAQ had to go to where the Russell is. I'll show you what we're talking about. You know I warned about this. And I warned about if the NASDAQ, if the Russell went to the 9 EMA on the right on a daily chart, then there's more likely other indexes would migrate to it. So you see the Russell on that dotted line right at the 9. That doesn't mean the NASDAQ has to plunge. It just means it futzes around till it catches up. Well, guess what? Go and put the 9 up here. And it's getting there. It's getting there. It's not there yet, but at least it stuttered for a couple of days so that highly sensitive 9 EMA can catch up. That's all it means. All these times it kept going up, but it sort of futzed around while the 9 caught up, and that's what you see right now. Now, there are divergences. Don't get me wrong. I'm starting to see even the Chinese market starting to roll over. Go and check this out, the Chinese market getting nailed. You thought there was good news this week with Trump and China. Well, that doesn't look so hot. That has plummeted under the 9. And that's why the headline of this and the thumbnail is talking about negative divergences versus actually some historically strong time. And I'll go over that in a minute. So you have that on the left. You have the Russell on the right sort of teetering. How about the German market? It's starting to roll over. But they're not rolled over enough. Well, now what do I mean? You got to see this really get whacked. So that's the way I look at it. You got to see the Russell really get whacked. Now you might say, well, the bond market's selling off and you're dead right. Not enough to matter yet. Just keep that in mind. Not enough. So we're getting the divergences, no doubt, but not enough of, I call it the point of no return, where everybody has to take notice with the U.S. markets. The other thing you're going to notice, though, if I put this up here, is the SPX. And what you're going to see in here with the SPX, it did catch up with the 9, as you see. And the other thing in here is that usually in November it starts going up. You can even put a cycle chart down here and you'll see it usually goes up. So anybody that says, oh, you got a short on October 27th because the cycle bottoms November 1st, that's not the way to do it. So, I mean, that's just being too cute. So let's just go and I'll show you a cycle chart because you know I like to show all shapes and sizes of things. So we're going to take a time cycle and you can even take a weekly and you can go into here. And you'll see, I already put it up for you, and you'll see November right here. Then where else? Well, guess what? November, right in that area. I didn't do it perfect, but it's usually around November 1st. And the reason is that coincides with when a majority of the biggies that buy back stock can start buying back stock again. So what would upset the apple cart in here? Lack of confidence in the U.S. economy would make companies less likely to be buying back the stock. You haven't seen that yet. You've seen consumer confidence go down, but not business confidence. But what would change that? What would change that to me is if you got that to break down. That's the regional bank index. So put this side by side with the SPX. I'll put the SPX on the right. So the SPX, as you see, is in Never Never Land all the way up here, while the regional banks is all the way where it was in July. If this has another leg down, people are thinking maybe there's more like instability with some loans and all that. If that gets to here, you're probably going to see U.S. stocks buy back less. Just keep in mind, if I put this in here and I put a date range from here when the markets went up to here, they bought like over almost $1 trillion worth of stock. So just keep in mind how that works in there. And so if this breaks down on the left and the Chinese market also breaks down, you'll probably see less buybacks. But you don't see that yet. I'm just telling you something that could happen, just hasn't happened yet. So that's a big deal in here. So that's the way I look at it. And so that's what I'm watching if I see enough divergences. So on the one hand, you are getting these divergences, but on the other hand, you're getting that the historical strong time now. Now, a lot of people ask me, well, do you go up till Thanksgiving or down? Well, here's another big old graphic for you. You'll see that usually you go up right at November 1st, and then you actually get hit right after Thanksgiving. Right there, it's tiny, but almost every year it does that. So I'm definitely going to be watching that. So day trade short, it worked great in Microsoft, worked great in Meta, and I'm still going to try to do those suckers. Swing trade long, I'm actually going to look for either the dogs or the high short interest stocks. The problem is a lot of the stocks I want to buy have earnings this week, so I'm going to avoid those as any kind of swing longs. Have a great night. Talk to you later.